Smart money concepts, aka SMC, is a way of life for a lot of traders, but it's also a taboo word and really something that gets a bad rep in the trading community to an extent as well. But in this video, I want to dive into some of the smart money concepts that I've been using for the past almost 5 years as a trader that have been able to give me absolute clarity, consistency, and really allow me to see the market's intentions for what they really are as price develops. So we're going to dive into a brand new series, about 3-4 videos where we're going to be exploring just a very simple approach to smart money, how you can use some of these concepts into your trading right now. And you're going to see how precise and how intentional the markets are around these concepts and why so much of the trading community has gravitated towards this style over the last several years. Excited for this, guys. Video number 1, we're going to be talking about something called imbalances, aka fair value gaps in this video. So we're going to head over to the charts and check it out.
So this is going to be the first example that we're going to do from a diagram perspective of what an imbalance or fair value gap looks like. Now, whenever we have price action, we want to see price go, up, down, up, down, up, down, right? And just kind of really make a very balanced price action where we have both buyers and sellers equally present in the market. However, sometimes in the charts, you're going to see where we have these really explosive moves, whether it's to the upside, whether it's to the downside, where the market is going to essentially leave these gaps. So a great example is this zone right here. And we can really look at this from wick to wick, right? So whenever we have these big candles, for example, this one right here, we want to pay attention to the wicks before and the wicks after. So for example, these wicks right here, and then you have this wick. And what you'll notice here is that there's really a big gap between the last wicks to the next wicks. So for example, if we draw that out from this wick right here to about this wick right here, that would be a big imbalance that the market has. Essentially, again, from this wick to this wick, notice that in this zone, there is only buy pressure. There are no sellers present at all. So what does that tell us? Essentially, what that tells me is that at some point, because the market will always, at some point, look to fill imbalances. Now, in this specific diagram, we see that we have a very strong bullish move to the upside. So I'll give you guys some tips about how you can actually look at imbalances for either buy opportunities or sell opportunities, depending on how the market is looking. But essentially, just to keep things simple at first, imbalances are, again, these big gaps here. And we know that at some point, price is going to gravitate to filling that in. So even though we are currently up here in price, I can expect the market to eventually come into this imbalance area right here. Specifically, whenever we have these imbalances, you want to look at the halfway point of those imbalances. So the market can come into the beginning of that imbalance and maybe react. The market can come into 50% of that imbalance and then react. So this is something that you want to look out for on the charts, because when it comes to smart money concepts, the reason why I love it so much in my trading is because it gives me confidence and it gives me a little bit more clarity when it comes to what is the intention going to be for the market. Where is the market going to gravitate towards? And we know why, right? We know that for whatever reason, we need to fill in all of this buy pressure at some point with sell pressure. What it does once we're within that imbalance just depends. We can easily run through that imbalance, or in this case, because we are so bullish, we have such a very strong push to the upside, we may just use this as a zone where we can get a pullback and look for a reversal off of that imbalance. So let's look at an example on the chart for NAS 100 of how the imbalances really work whenever we can expect price to basically tap into it and then push away. So looking at this chart for NAS 100, you're going to see that we have, some consolidation in price. We have some more consolidation in price at these two different zones. But if we notice, when it comes to imbalance, where can we spot the most glaring, easy to spot example?
And that's going to be this very strong bearish candle right here. If you guys notice, we had a major breakout of this consolidation zone from this really strong meltdown on NAS. And if we notice from this wick to this wick, we had no buy pressure come in whatsoever. This was completely a seller's market between this 19,926 price and this 20,066 price. So at some point, what this tells me is that we will have buyers need to step in and basically come and rebalance this void of buyers, okay? So when we are looking at doing an analysis for NASDAQ, right, and we want to say, hey, should we be buying or selling? Well, obviously, there's going to be other factors that you're going to have in your strategy of when you enter and exit a trade. But just as a directional bias tool where we can kind of know, hey, where can the market gravitate towards? We know that this imbalance right here is going to be a big factor because, again, that cannot stay that way. There has to be at some point where we come in and fill that imbalance. Now, what we do once we're within that imbalance is going to be a mystery until we actually tap into that zone. So some examples may be that we just come into that imbalance area here and basically just push through it, or we can get a very strong reaction from that imbalance point where maybe we come in, we tap into it, and then we reject it. That is the two ways that you're really going to be able to take advantage of imbalance. Number one, if we're down here in price, you can buy and target that imbalance as a exit point for your buy opportunities, or we can look at, letting price get into there and then looking for some other confirmations to either buy into that zone and keep it going, or wait for that rejection and then sell that off, maybe back down to here. So let's fast forward a little bit in price and see how we can react once we get into that imbalance area. So we're going to go ahead and mark this up with a rectangle here. And for those wondering, this is a concept that works on any time frame. You can use this on a 1 minute, a 15 minute, an hour. It doesn't really matter. You guys can use it on any time frame. Obviously, the higher the time frame is, the more that imbalance or fair value gap is going to matter in terms of, the overall higher trends. If it's going to be a big pivot point or what the case is, or whatever the case is, right? But again, that goes for any concept, whether it's liquidity, imbalance, support, resistance, trends. The higher time frames are always going to be more powerful. Now, on this 15-minute time frame, let's see what we got, because we also have another concept that you guys are going to learn about, which is liquidity. We have a lot of equal highs sitting right beneath that imbalance. So when I see that, right, that can be a sensitive area where we can maybe sell from, where we are taking out those buyers here and then selling off. More on that concept in a separate video when it comes to liquidity. But for the sake of imbalance, let's see what happens when price pretty much goes here, right? So market is pushing, and then here we get a very strong tap. Now, if we actually look on this 15-minute time frame, we hit and we reject very strongly. So we're going to need to go to smaller time frames here so we can get a more of a detailed view of what happens once we tap into that imbalance. So this candle pushing very strongly in here. Let's drop down to a 1 minute chart, and you can see we have our 15-minute imbalance starting here in this big orange zone here. And so price taps into that imbalance, and we start seeing that initial rejection. And from there, we get a very strong meltdown back to the downside. So that is why we want to pay attention to these imbalance areas and how we could use it. Again, for how I trade with my other concepts, part of my Liberty strategy, I would have bought somewhere in this area targeting these highs over here. However, you can also look at this area and say, hey, is price showing us signs of rejection? For example, these 3 bearish candles
after tapping into this zone, showing a early signal of reversal. Maybe you pull a trigger on some sells there, and we get that big meltdown right after. So imbalances, again, we gravitate towards them and we can push away from them as well. Now let's take a look at some other examples here so you can see how this is not just something that happens once in a while, but this is basically revealing how the market is created algorithmically and how we can really use this as a consistent approach to either, again, entering trades or looking at exit targets. Now, if we look at NASDAQ during this price point right here, we see that NASDAQ had been pushing to the downside, really just making a bearish move. And then here we get a really strong rejection and started pushing above, shifting structure above this supply zone. And so if you notice, what did we leave behind over here was a very nice imbalance area right here. What I'm looking at is this wick to this wick right here. So essentially, if price comes into that zone, we can look at that as a potential buy area. Why? Because again, the market was going down. We started getting a very strong rejection pushing us back up, but we know that we're always going to have pullbacks in the market. So if we get that pullback, where would it go to? I would really believe that it would come into this imbalance area, and from there what you'd want to see is some signs of actually us rejecting that zone, and that can be your criteria for an entry, for example. So let's go into that imbalance area, and this is exactly why I want to mark up the 50% of this candle. What I do is I use this rectangle and I go to settings and I will put under the style middle line, and you guys can put whatever colors, but it will basically mark the 50% of that imbalance, right? So again, what I'm doing is I'm dragging this rectangle from this wick to this wick, and this is the 50% point right there, being the most accurate area that it could react from if we are going to use imbalance, for example, for an entry. Now, if you see that you get that reaction from there, some people, they'll just put a buy right into that zone, or you could wait for it to reject, for example, how it did right here. Maybe pull the trigger there. You see how we react off that zone. Respecting that 50% line very, very aggressively, right? Market comes, pushes off that zone very nicely. So this is a very powerful concept, again, for entries, and they could be very accurate as well. Now, let's continue to really push forward in price action and show you guys some further examples. So here we have another example very similar to what we had in this zone right here. What happened here with NASDAQ was we had price make this rally up, started pushing down and down, and then we had this very aggressive push to the upside where we shifted structure, showing us that we were willing to go bullish. Now, what do we leave behind during this very strong push is another imbalance area. So look how we have from this wick to this wick. If we draw out that zone, let me zoom in here. From this wick to this wick, we drag that rectangle, and this is our imbalance area. Okay. Now, again, for entry purposes, because we see that price tried to come lower, rejected, and shifted structure. So if we can come back into this area, wait for some type of reaction, that may be another good area to target for buys. So let's say we either target the imbalance right here or the 50% of that imbalance, for example, and let price kind of come into this zone and see what happens. Price taking a little bit. Now here we start looking like we're going to get into the zone here. So at this point, we've already tapped into the imbalance, as you guys can see right here. And we get a very nice rejection off of that right there. and price explodes off that. So again, the 50% line is not a hard rule that it has to do that, right? However, the entire imbalance from here to here is what we need to pay attention to. The 50% line is just that maximum point where if it is going to, for example, react and reject off of the imbalance, this is as low as it would probably want to go, as we saw in the prior example. Usually if we go deeper into the imbalance past 50%, it's because we're probably going to end up pushing through it. But if we get the rejection, it could be as early as the beginning of that imbalance or the halfway point, somewhere in that zone, and you can see that nice reaction there. Now, as I tell all my students in the private mentorship program via akashx, this is a concept that you can use whether it's trading the indices, whether it's trading metals, whether it's trading FX pairs. It really doesn't matter. And I encourage you to go into your own charts and validate any information that I or anybody you're learning from is teaching you, so you can see for yourself. Go in your charts, learn to spot these imbalances and how powerful they are from points of rejection or points that you can use as targets in your trades, and see how much that gives you a roadmap for understanding the charts and understanding where price could go. But guys, hope you enjoyed this video. Please make sure to like, comment, subscribe, and share this channel. And I want to let you guys know we actually have a brand new promo for the month of October. If you get started with our private mentorship program via akashx, you guys can earn a couple of different challenge accounts depending on the type of membership you get with us. It could be a 10K account, 25K account. It could even be a 200K challenge account with TradexMastery, our official prop firm partner here at akashx. So links in the description. Make sure you check that out and message me privately if you guys have any questions about the promo, about imbalances. But other than that, hope you guys have an amazing rest of your day, and let's run it up.